Your basic trading patterns are perfect for a good foundation of a trading strategy, but you cannot just trade solely on those. And so let me show you a few things over the years that I've learned of trading patterns and what makes them more consistent and more likely to actually work in your favor to make a profitable strategy off of. Now, first, let's talk about a super common pattern, the head and shoulders pattern. So all head and shoulders is it's a reversal pattern, either reversing the market's going to go down or reversing that the market's going to go up. It's just signified by the market making lower lows and then all of a sudden it make a higher low, and that is a clear reversal pattern. It's likely that this is showing you that the market will likely reverse in the other direction. Now, you don't want to blindly be trading these by themselves. A big key that I've found over time is to combine these with other things. You want to see this pattern at a previous high or a previous low. Here is a head and shoulders pattern, and it's at the same level where the market previously reversed off of. And so what that does is it combines things to make the pattern more likely to work in your favor. And so the market was pretty much at that same area, and it broke a little bit higher here, but it eventually reversed, and you were able to use this pattern to predict that the market would reverse lower and take a profitable reversal trade off of that. And so just to show you an example from my trading is here is a big support level. Drew it from a 15-minute chart. We're actually looking at a 1-minute chart right here. And all I'm looking for is the market to potentially reverse and find some support off this level. And then right here, what we have forming is a smaller version of a head and shoulders. And so just to walk that through, so right here, this is me entering in on a trade, but to just show you where I see that head and shoulders is the market kind of makes one swing lower there. It makes the head of the shoulder there, or the head and shoulders, and then the shoulder there. And so this is that head and shoulders pattern forming up. And then from there, I jumped in on a trade and bet that the market was going to go higher off of that. And, at that point, you have your strategy and you let things play out. And so just to quickly walk you through that, I entered in right after I saw this big green bullish candle here. And then I just put my stop loss below that because I thought, hey, I think this is a good pattern and the market is likely to at least reverse up to here. And so another thing I found is when the market kind of has a big sell-off like this, it's actually likely to reverse that if it reverses. It's essentially a climactic move. If and when it does decide to go long here, it will kind of reverse that big sell-off it has. And so that's a good key to look for a potential target. And so for here, this trade, the market was kind of crazy. I moved my stop loss kind of up to here when it had this big sell-off to try and manage some of my risk. And then I moved it to break even because just looking at the back left of the chart here, the market was kind of all over the place. And so I was playing it pretty tight. I was nervous that the market was going to come back and knock me out. And I thought it was good to actually take away some of that risk because the market's likely to swing back and knock me out. I really wasn't confident in this trade, but you have to push through that nervousness and let things play out. And letting things play out did really work well for this trade. It really started to take off here. And once it kind of does that, I like to ratchet my trailing stop up really tight. I like to change my management style. I don't want to get into that too much right now because we are talking about the patterns, but on this trade, I just kind of let things play out. And, once the market comes down and knocks me out, I'll get knocked out on the trade, but I want to go with this swing as far as it will go. And so about here, it knocks me out about $1,700, and that was a really nice swing. And so that was a great way to trade a head and shoulders. And you can see the market had a really fast pullback. That's kind of why I have that really tight management style once it gets going there. And again, all this was just from a simple head and shoulders at a support zone. So let's add another thing that you can use to increase the consistency and probability that your patterns play out in your favor. And so an example is a trend line. So just looking at that head and shoulders pattern, let's say you have a downtrend, the market's kind of swinging around and it comes up into there and produces a head and shoulders. That's a great way to say, well, I think this head and shoulders combined with this downtrend is likely to reverse the market. Now, another thing is, let's say we have this support zone up here and the market's kind of coming up into it, and then it makes our head and shoulders and we're looking for the market to go down here. Well, another good confirmation that you can use is you can see there's a kind of a clear trend line made by this upwards trend into that level. Now, of course, it's not always going to look super clean like this, but when it happens, it gives you a lot of confidence. And you can see right here that that trend was broken with that head and shoulders. And so that kind of adds multiple layers to your strategy and your ability to confidently say, okay, yeah, I think right here the market is going to reverse and I'm willing to bet money on that. And so just to show you a different pattern that I use and kind of another way to use trend lines is here we are at a support level. And so that's, of course, number one. I like to always use these at a support or resistance level or a downwards or upwards trend line. And then kind of the pattern I'm going for here is kind of a little unorthodox, but it's essentially a consolidation pattern. And so just to give you actually a really clear example in hindsight, right up here is that pattern. You can see the market kind of came up to this resistance level and then it kind of just chopped around here. It consolidated, it lost momentum. And so what that shows you is, well, the market had a really clear, strong uptrend right here, a good trend line actually as well. And you can see that, well, if the market was going to continue this uptrend, well, it would probably keep going like this. But instead, it started to produce a lot of dojis and choppy candles. The price is clearly going up and then just kind of sit in there. And so that I like to use that as a good reason that the market is going to potentially reverse. And then you can see after this, the market did end up reversing off of that level. And so same thing down here, you can see that the market is clearly in a downtrend. And then all of a sudden, it's just started to go into consolidation. And so because of that, I think that, okay, well, again, if this was going to keep going down, it probably would look more like that. The price would not be over here. And so it gives you a good likelihood that the market is going to potentially reverse. Now, of course, you don't want to just be randomly doing this of, okay, well, the market's gone up here, it's consolidated, or the market's gone down here, and there's some consolidation candles. That's why combining these is so crucial and important. And so here, again, it's combining this kind of bear flag, actually, you can say, or consolidation at a support level. Now, another thing, like we just talked about, is now you can see I'm actually trying to enter in on a trade here, is that trend line as well. And so right here, if you just actually draw a trend line off of these swings, it clearly shows you that that trend and trend line is broken. And so I like to use that as another confirmation. And so that's the best way to trade that I've found, is layering things on top of each other. You know, one, you have your support level, two, you have your actual pattern you're looking for, and three, you have the trend into that level is broken. Because you, of course, at least with reversal trades, you don't want to be betting that the market's going to reverse when the trend isn't clearly showing that it's going to reverse. And so just to quickly whip you through this trade and kind of show how it played out is, you know, I put my stop loss below this swing because my thought is, you know, if the market comes here and kind of maybe goes up and then knocks me out and keeps going lower, that's totally possible. That's fine. You know, I want to manage my risk and get out if the market's just going to go against me. And so eventually, as the market has a pullback, I move my stop below that swing. That's kind of how I like to manage my trades. And then from there, the market kind of does its thing. I slowly move my stop loss up with the swings, and it turns out to be a pretty good reversal trade. Now, this trade, I was trading a lot smaller size than the last trade. You can see we're only up $200 compared to the last one was like $1,600. But this one, I was only risking about $150 or $200 as well. So the sizing is what's important. Here, I'm getting about 1-to-1 risk reward, and that is what's important when you're coming trading. When you have a strategy, you want to be focused on the risk reward and slowly grow your account over time. This trade was from a little while ago when I wasn't trading as big of size, but now, just like that first trade, I've increased my size over time as the strategy has worked out in my favor and grown my account. Now, I want to talk to you about a failed breakout and how we can use that to increase our chances, and then also show you that the market likes to move in swings of two. And so what this does is combining these again with everything else that we've talked about increases your chances of finding a spot where the market's actually going to reverse in your favor and you can make a profitable strategy off of. And so first off, just to show you what I mean by the market likes to move in twos is look at right here. The market has had two swings up. There's one big swing. It's very clean. And then it has a pullback and then another big swing. And if you actually, I don't have the tool with me right now, but if you just visually look at how big these swings are, they're roughly about the same in distance. And so the market has symmetrical moves sometimes. And so that's what this is doing right here. It's having a symmetrical move. It kind of moves once, pull back, and then has a move that's about the exact same distance. And then you can see up here, we have kind of an uptrend that's clearly broken. We're going into that consolidation. So we're having that pattern again, but on the flip side, it's kind of a reversal pattern. And we have a resistance resistance zone up here that the market's likely to gonna find a potential reversal off of. And you can see it had an initial reversal right here actually. And then the third thing is what I'm jumping in off of right here is a failed breakout. This is the top of this line right here. That's the previous extreme. And so I draw my support or resistance levels off of generally like double tops. And so off of the chart, gonna kind of more to the left because this is a recording of my trades, is the market's done something like this. And so I have drawn the high off of there and I said, okay, the market's found resistance in this zone and then it's kind of, sold off from there. And then now we've come up again and, we've broken out of that level to right here. And my thought with these is, well, the market can still fail back in here because what it's doing is it's attempting to break out higher. And that takes a lot of energy in the market because there's a lot of people like me that are looking to bet the market's going to go lower up here. And so the market can do what's called is a failed breakout. And what it does is it breaks out here. It tries to keep going higher. Maybe breakout buyers get in here thinking that, okay, we've broken out of this extreme. We're going to keep going higher here. And that works sometimes, but a lot of the time, if you have these things line up, it's more likely that it's going to fail and reverse back lower. Now you can see it's kind of starting to come up here against me, but a lot of the time the market will kind of make an attempt to go higher and then reverse lower. And so I've maybe jumped in a little bit earlier here. I could wait for it to do this attempt to keep going higher and then reverse. Over time, I've actually started to wait for that more, but the concept still applies in terms of the market's made a really big push higher and all these patterns are really coming into play, showing that it is likely that we reverse here. And as well, what really adds to the reason why this is probably going to give up here, which you can see it's starting to do now, is that it's had these two big pushes higher. The market's already had a massive run up and it's already used a lot of its momentum. Sometimes when you're looking for reversals, the market will be going up to one of these levels and the trend will be a lot more solid, have pullbacks in it. Essentially, it's a healthier trend. And in this case, the market is so fast. I found that when the market moves so fast like this, it's more likely to give it up because it's an unhealthy move versus, when the market does a clear trend with pullbacks and moves like this. And so because of that, you can see that the market has reversed. Once it kind of lost its steam up here, it reversed very quickly. And so again, this is an example from a little while ago, which is why my size is a little smaller, but it was just so clear that I thought it was a great example for this video. And again, it shows you that you can start with a smaller account and slowly scale up your trading. That's what you should do. And then slowly move down with the swings with your stop loss. That's what I found that I like to do the most. And then of course, I try and target the other end of the swing. Sometimes that plays out, sometimes it doesn't. And sometimes I get 1-to-1 risk reward ratio. Other times I get, 1-to-3, 1-to-4. I've even got like 1-to-6 sometimes. But this trade closes up about 1-to-1 risk reward ratio as well. And that's totally okay. You're not going to hit home runs all the time, right? It's all about getting consistent winners over time. And if you want a little bit more in-depth walkthrough of my actual strategy that I've talked about here, check out this video right here. I'll go through my whole checklist and everything involved with doing that.